Thank you, Katia, and welcome everyone to this fourth webinar series of the Daniel Water Program in response to the COVID-19 crisis. My name is Patricia Lopez. Many of you already know me from our collaboration in the last few years. It is a great pleasure to be moderating this session for you all today. And thanks very much to Raymond and to the Daniel Water Program team for organizing, and for all of you for registering and participating today. I'm going to be very brief and hand it over to my Water Global Practice colleagues to present today. But I just wanted to very quickly say that as we're all living through, the COVID-19 is shaking our societies, our economies, and the way we are thinking about future development. So we are here today to discuss the impact on the water sector. Not only is the water service vital for the prevention and the response to a pandemic like the COVID-19, but what we are also seeing and hearing from our clients and our partners throughout the globe is the impact and the different challenges that water service providers are facing, including the impact on the financial sustainability, in some cases even affecting the business continuity. So we've been working hard in the last couple of months to develop a few tools which will be presented here today to be able to assess that impact and respond to it. And I will be introducing in a moment my colleague Joel Kolker, who will be making an introduction around these tools. But I would just very quickly like to remind everyone a point of order or logistics to please, as you type any questions or comments that we may take on board for the discussion part of this webinar, remember to use the address them to all participants as you type them, because then everyone will be able to see them and contribute to the debate. So without further ado, I would like to introduce my colleague Joel Kolker. Joel is a lead water and sanitation specialist with the Water GP of the World Bank. He has many hats, but the most visible of all probably is he's the program manager for the Global Water Security and Sanitation Partnership of the World Bank and Partners. And Joel has been a leading force to the development of these response tools by our practice. So over to you, Joel, when you are ready.
Thanks, Patricia, and I hope everyone can hear me. First of all, I want to echo your comments in the beginning about sympathy and hope everybody is actually coping through this. We're now about 3 months into it, and I know it's becoming kind of the new normal, but it's certainly not normal. And I particularly want to thank and acknowledge the work that's being done by the utilities. Our colleagues in the health sector and other sectors are getting quite a bit of recognition. And we also know that water is really, and hand washing in particular, is one of the 2 ways that you can cope with this pandemic. And I sometimes note that our colleagues running the utilities are not always given the credit, because we are seeing a lot of stress there. And that's really what we wanted to talk about today. I'm going to be very brief. Just to put this in context, Midori is going to give an introduction on a tool that we've produced, and then Aldo will go through that tool. The purpose of the tool is to try to quantify what the impact of the pandemic is on your operations in terms of the utilities. I'll let Midori go into that more detail, but just 1 or 2 points. This is not the only tool out there. Midori will highlight this. There are others out there, and we're not advocating that this is the only one. Second point I want to make is that everything we're going to talk about today was demand driven, and I'm going to talk about a second thing. I think it's worthwhile that we've been in touch with, over 60 utilities between us, looking at how the pandemic, in 60 countries, I shouldn't say pandemics, We're working across the board and trying to rectify and assist wherever we can. So these tools that we've put together are very practical and very much demand-driven along that line. And again, Midori will go into that in some detail. I do want to talk a little bit about kind of how this fits into the bigger picture. I think what this tool that Midori and Aldo are going to talk about really tries to quantify what the impact is of the pandemic. And that's really all it is. It is a financial model, and I don't want people to be put off by that. I know it can be kind of scary, but we have mechanisms to help people. But that's really what it is doing. And there are scenarios you can do. There are ways you can look at this. It's not a financial model in terms of going out and raising capital. It's really trying to look at what the impact is of the pandemic on your financial operations. And that's really it. In addition to that, we're undertaking a couple complementary exercises. The second one is we're putting together what's often referred to as a liquidity facility or a financing facility. A number of countries have now moved on to a second stage where they're looking at how they might design a facility to help out water utilities. We see it in Ghana, we see it in the US. It's under discussion in about 35 or 40 countries that we're working in. Our task team leaders in the bank are supporting that. The bank is looking at supporting those facilities. Joy is very involved in Latin America. Patricia's been very involved in the ECHO region. We have major efforts going on in the MENA region as well, and other regions are talking about this. So again, based on demand, we put together a financing facility paper, which very frankly, Patricia, Midori, and I have been working on. It's been not an easy paper to put together. And the reason it's not easy is because the global or the local ramifications of this will greatly influence the design of your facility if you choose to go down that route. So issues like the institutional arrangements of water utilities. Is there a regulator? What role does the ministry play? How is the service provider structured? Issues around capital markets. Does private sector finance any of the water utilities? Are they a potential conduit that could finance this? What's the role of national government in this process? There's a number of national and in some instances even subnational considerations that need to be taken into this. What this paper that we're finalizing does is try to discuss what the major concepts are, what the major considerations should be, the pros and cons generally of what those are. And then we also include a decision tree in there and some discussions if loans are being used, what one might look at. But this is really of this second stage after one uses the model and confirms the scope and quantifies the scope of the problem. The paper lays out the overall approach that one might take. The next step would be to look at those local considerations, and really the design for this must happen at the local level. In some instances where there's federal systems, like India or Brazil, you might be able to look at a subnational entity, like a province or a state, to take care of this. In other instances where it's small island states where you have some common currency and common regulatory environments, it might be possible to look at a regional facility. But for the most part, these are going to be national facilities. And that effort of design really needs to take place at the local level, at the national level, I'm sorry. Bank staff across the world are working with our counterparts to do that right now. And the paper really is a concept and a consideration paper on what one would look at to take that discussion forward. So the third phase then is to get into implementation, and the paper talks about that as well. Once you've designed this, you have to implement it, and there are considerations to look at there as well. So to summarize, we're going to talk today with Midori and Aldo is really quantifying the scope of the problem. That's phase one. Phase two is looking at a design of a facility if the public policy people make a decision that that's how they want to go. What we lay out in the paper are the considerations broadly, second part of that needs to look at the local considerations, and then the third phase will be able to get into the implementation. So with that, I hope I've been able to lay out the overall approach here, and I wish you all the best of luck as you take this forward. We are around to help, both on the model, as Midori will point out, and Aldo as well, but also as you look at more strategic options in terms of how you might address this pandemic as we continue in a very, very difficult situation. So with that, I will leave it, and I guess, Patricia, I'm going to turn it back to you if that's okay, and I'm certainly happy to answer any questions later on or through individual contacts as appropriate. Thanks.
Thanks very much, Joel, for putting the tools in the overall context and the sequencing as well. And hope you can stay around a little bit for some Q&A before you have to leave. Thank you very much. And I will hand it now over to Midori Makino. Midori is a lead water and sanitation specialist with the Water GP as well. And as Joel already mentioned, part of the core team working on the development of these tools. So without further ado, over to you, Midori, for an introduction on the first of the tools that Joel mentioned, on the quantification on the impact, which is the financial model.
Thank you, Patricia, for the introduction, and good morning and good afternoon to all of you connected online. And thank you very much for the invitation to participate today. As I was introduced, I'm Midori Makino. I work in the Latin America and the Caribbean region in the World Bank, but I'm also part of this global team that's developing this tool in response to the high demands that we are experiencing in our client countries. This tool that we'll be presenting is, as Joel said, this is in response to the demand coming from our clients because of the difficulty that they've been experiencing with this COVID-19 outbreak. We have already carried out at least 5 or 6 training sessions to go through this model with our task team leaders within the bank. But I believe this may be the first opportunity to really talk to our external partners about this. So we're very excited about this opportunity, and I hope this is going to be helpful to you. The purpose of the short presentation that I will be giving is just to give you an overview and the context and the objective of this tool before we hand it over to Aldo to actually go through the the tool itself. But I wanted to show I have a very short presentation to give you okay. Now I hope that you can see the presentation. Okay, so the context is illustrated here. You may already be quite familiar with the dire situation that the water utilities are in. In the early days, right after the outbreak, many of the governments and the utility introduced response measures to handle the situation. And those include, here you can see that the demand increased for wash and sanitation and hygiene activities. We also had revenue-related measures that were taken. For example, suspension of service disconnection due to lack of payment. Utility bill payments were waived by the government in many cases, or they were deferred for many of the consumers, especially the low-income families. Tariff increases were frozen. Increased cost would relate to overtime, to increase protective supplies for the employees and equipment and disinfecting supplies. We also had to use tankers to provide enhanced services to underserved communities. We produced bottled water, compact water treatment facility plants for use in the hospitals. And we also had residual chlorine use, increase in urgent rehabilitation works, and so on and so forth. So as a result, we have seen a tariff revenue shortfalls of at least 20 to 40%. In some cases, they're up to 70 or 80% reduction, right, in the month of April. Lower revenue collection, high operating expenses, increased expenditure, at the same time as facing the pressure to pay back their outstanding loans and debt, other debt. So this basically affected this the cash flow of these water service providers. Just to give an example, in Latin America where I work, Brazil, for example, we estimated about monthly revenue losses in the amount of like $300 million. For Colombia, $40 to $50 million. Peru, $15 to $25 million. It's quite significant amount of cash deficit that they're experiencing. The objective of this tool is to help the water service providers to quantify such cash deficit and to articulate and demonstrate the financing gap that are associated with this COVID pandemic, and to justify a claim for additional resources, regardless of the source of funding. It could be public or private. This is all in order to ensure continuity of the services and to effectively respond to the demands of their clients. So this tool was developed in Microsoft Excel. So you don't need any special installation requirements. You just have to open an Excel file and you start using the model. The structure is simplified to enable general use by as many service providers as possible. And the inputs will be done on the monthly basis, and it focuses first on the first 12-month short time period, just to focusing on the COVID impact. As Joelle pointed out, it's not the only tool. It's not to replace what you're already using. If the water service providers already have tools and financial models that they're using, they could by all means continue to use that, just to capture, to enhance, incorporate the COVID-19 measures in those models. The cells, you can see when Aldo goes through the model, you can see that it's color coded, so it's easy to identify which input cells that you can use to put the financial information. We have developed two versions of the model, but the one that we're going to be presenting today is the version that is most, based on the feedback, it's the most user-friendly. It's very simple. It only has two worksheets, and we also have a manual developed that go with the model, and we have already translated that into the tool and the manual into Spanish, and we're also in the process of finalizing the translation for French and Portuguese. Well, I don't think I need to go through this because this is quite basic. What we're saying is that the principles applied to the tool is an accrual accounting, and we use the three standard financial statements that include income statement, balance sheet, and the cash flow statement. And we assume that the working capital requirements and debt service obligations are first fulfilled from internal generated funds before the new obligations are considered. In terms of process of using the tool, so it has three steps. So first, what the model does is to give you the cells for the baseline, for the projection of what if COVID never happened. So that's the baseline. And then step two is to do the financial impact assessment, assuming the likelihood of COVID affecting in certain operations and finances. We already are a few months into this, so we already have some track record of, March, April, May impact. So we will project the next 12 months. And then using the results, we take the COVID cash minus the baseline cash to see the the difference, the impact that it's giving in the utilities cash flow. And then using those results, we are advising our clients to develop emergency response plans to improve their cash situation. And here I also wanted to stress that we're not only asking them to resort to subsidies and government transfers or tap into the liquidity facility type of option that Joelle had introduced earlier. But we also trying to help our utilities to come with alternative ideas, methods to really reduce their cash deficit from the internal, anything that's under internal control, or negotiating debt restructuring, or talking to the electricity company to defer their electricity bills and so on. So there are several things that they can do to improve the situation. I will not go into details on this one, just to show you that there are only it's a quite simple one of the two worksheets, COVID impact assessment worksheet and revenue cost build-up worksheet. And these are the different elements that are included in the tool, which Aldo, I believe, will go more into detail. So I will stop here with my presentation, and I would be also happy to take any questions. Thank you very much.
Thank you, Midori, for this very good overview of the tool and for sticking to the time. I'm sure there will be questions that you can address later. But let's introduce and hand it over then to Aldo Bayetti. Aldo is currently a freelance expert, used to be a World Bank staff for many years until he retired, but he's basically the star financial modeler behind this tool. He was already in his World Bank times. And what I would like Aldo to do is to actually take us through the tool itself, and how to input and run the basic assumptions that you would have to make under step 2. And Midori already mentioned that the very first step would be to develop a baseline scenario. What if COVID-19 had never happened? So over to you, Aldo, for taking us through the model.
Thank you very much. What I'm going to do right away is to share my screen and go into the model. Can everybody see that? As Midori indicated, this is actually the most challenging part of this exercise was to create something that could be used generically by most water service providers. So it was typically in my past work with the bank, I would actually do a lot of customizing and so forth. And one clarification is that this simplified version does not have the balance sheet information. The balance sheet projections are included in the more enhanced version, but this one is really designed to specifically address the cash flow differences. So let me just start just with the different sections. The first sections here is the identifier section, fairly simple. As Midori indicated, the blue cells are where you actually input, and then the white cells are essentially formula cells. The way the formula cells work is that they come from the second sheet, which is the revenue and cost buildup sheet. But I'll first start with the main sheet here. So you basically, the identifiers, the name, the WSP, maybe the contact person, maybe you have a contact information. And then here we have the opening month of where you want to begin your projection. So what this does is that if you want to start in July, the opening month period would be the June period. If instead you wanted to start in March, the projection, you would just change the opening month to February, and that would change the entire projection forward. The intent is to actually have a short-term projection, one of which you can actually do. You may be able to revise 6 months down the road, or do another one for the following year if the COVID situation is still affecting the operation of the utility. So it's quite flexible. Assuming we wanted to start our projection in March, when at least in where we are now, that is where utilities began to experience challenges with regard to the COVID situation. And then you might want to look at updating this to another month. The currency, this is the other kind of very interesting challenge that I had, because we wanted the water, the WSPs, to be able to use their local currency. So in this particular situation, we have the Indonesia rupee, the rupee here, and you can then put your own currency here. And the only thing that the protocol for this is that some of the items, that all the projection items will be in millions, right? And some of the revenue and cost buildup items will be in the actual currency without any, and so when we go to the revenue and cost buildup, I will indicate to you which ones will be, most of the cost parameters will be in the actual unit. So you can change that to whichever currency you're more. Could be euros, could be dollars, could be Kenyan shillings, any Philippine pesos. As long as you maintain that protocol, you will get the correct projection numbers, and so that could be applied. Now, as Midori indicated, in the enhanced version, we have actually a much more sophisticated approach of doing the actual, the pre-COVID situation. In this case here, what we are suggesting and recommending is that you take an actual average, the actual monthly average, based on pre-COVID experience, and what is included in the user guide, the preference is to actually take an average over the past 12-month period, because many water utilities have variations in consumption and so forth during the year, and so that would actually give you a better estimation. And so then the actual averages are then inputted here, right? And then your projections are then over the 12-month period. And then what this does is that actually calculates the pre-COVID cash flow situation, and then the post-COVID situation, and then the total financial impact between this this pre-COVID and this post-COVID. This particular statement shows the revenue buildup here, and we have included water sales and sewage for those entities that also have sewage. If you don't have sewage, you don't need to put, you don't need to input any of that. And then what I actually decided to do is actually put in the collection efficiency right on the main sheet, so that you could then use it as a way of simulating, you know, taking a look at your assumptions. So here in this particular case, if you wanted to, you say, okay, instead of 30%, it might actually be at 50%. Well, how does that change the numbers, right? So you can actually do that right away. Then we have sort of the total revenue line. And here we have a situation where if you had identified local government, in some cases, utilities are required to pay back some of their earnings to the local governments, or in other cases, the local governments provide a regular subsidy. And this is where this would be included. In this particular case, the negative amount means a transfer from the utility to the local government, and a positive amount means a transfer from the local government to the utility. Now, assuming in this particular case, what we are indicating is that this is also an assumption issue. If the local government is not going to provide any additional funds during the COVID, obviously where they were before, obviously you would need to put this as a zero, and that would let me just and so then that would also then affect a change in the amount that you will not be receiving. Let's say this is a zero as well, that you will not be receiving from your local government if they do not have those funds. So that is an important assumption that needs to be made. So then in terms of the total revenue line, you have the difference here. Now, the other important aspect is that we have the same kind of situation here for operating costs. Again, an average figure based on, let's say, 12 months prior to COVID, to the projection period, and then the projection. Now, what we have seen, and the reason why we have the operating costs, is that sometimes there's going to be changes in consumption between households and commercial establishments, and commercial establishments also may include government and industrial establishments. So we're aligning. So in the situation here where I am in Washington, a lot of businesses have closed and their water consumptions have declined, and as a result, then people staying home, the consumption of households have also increased. So we wanted to also track those assumptions as well, to make it a little bit more, how you say, rational in terms of what the projection will indicate. So you will have an operating cost impact based on the assumptions that we will then go through in the revenue and cost buildup. So we said we had operating costs, and we have all the different elements of your operating costs. And if we have another line item that you have not included, that you particularly you have an opportunity to put other water operating costs here. And then we have wastewater. This is misspelled. So wastewater operating. I wonder why it's misspelled, but anyway, the wastewater operating costs. And here we have, again, the buildup of those operating costs is, again, if you don't have wastewater as part of your operation, this would not be included. Then you have other direct costs, which then are, you can input there if you have other costs that are not necessarily specified in the model, you can include those to make up the total amount. And you have then interest expenses if you do have loans. If not, those would be zero as well. And then I also included the depreciation expense only because this is not a cash flow item. Depreciation is not cash flow item, but if you do pay, if the utility does pay a corporate income tax, it is a reduction in the total income tax payable. So that's why the depreciation expense is important to indicate, but only if you are paying taxes. And then the taxes would be basically on the profit before taxes. Obviously, in this case, as you see, we have negative profits. Sort of, there would be losses in these particular months, and then profits over the next period. Again, a summary of that situation is showing up here. Now, so that the profit after tax, this becomes your your income statement account, where your profits under these assumptions that I was showing you here, the impact is a 25 million in the currency that you are using. The post-COVID is a negative, just the post-COVID. So there's two elements here that need to be looked at: the losses in the post-COVID against the pre-COVID situation, which is this number, and then that just the loss of income just for the post-COVID period. My sense is that utilities need to be made whole, need to look at their entire financial impact assessment, where in some cases then the government may say, well, we're just going to deal with your net losses after the COVID situation and not necessarily account. But that actually, I think, shortchanges the utility. So if for all utilities that really want to be whole for the situation, they would look at this number in the final column. And this is then the most important part of the sheet here, which then takes the income information and transfers it to a monthly cash flow situation. And then so it takes the profit after taxes that we have, adds the depreciation expense as we had included here, and then gives you the operating cash flow for that period. And then here is where, if you have principal repayments that are, if you have debt and you need to provide principal repayments, again, we have indicated the interest is included in the profit before taxes, but then the cash flow item is the payments of principal that would be included in this item here. So then the cash flow after debt service is shown at this point. And then we have what we have included here is additional additional CapEx investments that need to be made because of the COVID situation. And then we have a little table below that actually feeds into this number here. And this could be it could be new hand washing stations and kiosks, cleaning and sanitation equipment, interventions, maybe water trucks that will provide water to outlining areas and so forth and so forth. And then what needs to be also included here is the existing work in process. I mean, obviously, if a utility has continuing works, they need to be put in there as well. And obviously, so in other words, if you have say 200,000 in existing works, they will you can't just stop from this particular analysis, you can't just not show it. And so then this would then show the capex, and maybe you had funding for that amount in place, but you didn't have funding for the other items that you are now considering as part of the COVAX. So you the COVID, and so you would put the existing funding in place that you have already negotiated and has been approved. So let me just stop here for the second and see if there's any questions before we go into the other well, let me just then end this thing. So the end this particular. So here, after this, we have the month-end cash flow, and these are all negative numbers because they're in red, right? They're all negative numbers, and so you can then see where your major, obviously, if the situation improves at the end of the year, you might go back to some kind of a positive figure, but here is the negative. So this is the on a month-to-month basis, that would be the liquidity problem that the utility would have that is not funded. And then this line item here is the total negative cash flow impact against your pre-COVID situation. So again, there's two numbers that are very important. This number here is the liquidity problem for the COVID projection. This item here is the total cash effect impact before your situation and then after the COVID thing. And then following this, we then included a small table here to show the graph of how these numbers, how the impact is where this is affected. So your revenue is dropped by this amount, costs have increased by this amount, your profits have actually gone down by almost 25 million. Then you have CapEx related costs, and then program funding for CapEx is that, and then you have the total year-end cash flow at the end of the month of the projection year is roughly the same amount as your profits. So any questions?
Apologies for the interruption, but just to clarify, in this example and with these numbers that you have right in front, basically the cash needs have increased by 5.7 K, right?
Basically, there's two ways to look at this, for utility, is the total impact is 26 million, right? Which is the total impact, because it's also the opportunity cost that you had before you were showing that you had a monthly end month cash flow per month of 1.6 million, and now you are having losses, mostly losses in the year. So this includes what you've lost because of the COVID situation. This number here is the total of this liquidity problem. Okay, so you're from a, if I was a utility, I would not be happy just to be able to get to zero on this, on the liquidity problem. I would also say, well, wait a minute, how am I going to get back all the other losses that I have received? And so in negotiating some kind of a liquidity facility, you have two benchmarks that you need to be looking at from the point of view the utility. Is that more clear? Is that clear?
Yes, Aldo, thanks. This is clarifying, and basically it means also that the utility is using up whatever cash reserves it had to confront the monthly cash needs, right?
Well, typically what is happening, and then, you know, there's been some comments that maybe we should have included some of the balance sheet information on this particular spreadsheet. The point is that you will know how much receivables you're going to be losing out anyway, you know, from the COVID, and this is shown here. This is actual revenue collected here. You have the pre-COVID situation. So this is your negative in terms of collection. So the accounts receivable is implied here that your accounts receivable, what you're losing out, and your accounts receivable information will be increased by that 15. Hopefully then you can recollect it. But a lot of the utilities think that this could be recollected over, you know, 3-4 months period. I doubt that seriously, that, you know, utilities will have to develop some kind of installment payment for customers to repay their outstanding receivables, but it'll have to be over, in my view, a year to maybe a year and a half. You know, with these kinds of you know, shortfalls in collections, hopefully then the utility might be able to regain that. Now, if the government then says no, these people will not be required to you know, basically provide to actually pay for the outstanding receivables, the outstanding bills, then that reason is why, if I were a utility, I would then, you know, request for the government to pay instead, because obviously it has a total impact on the finances of the thing. Now, as Midori indicated, once you've done your, before we go to the next the next step, once you've done your plan, you may need to then look at how you can mitigate these numbers, right? Without necessarily, you know, you might be able to essentially postpone your payments of principal. If you're borrowing, the government may have already decided to fund you for some of the you may negotiate some funding for your negative cash flow on a monthly basis, and then you might still have a negative shortfall, which may be then part of the liquidity facility that Joel had indicated could be implemented in the given country. So then this becomes then the plan once you've done your assessment, and then at that point you can make decisions on how the plan can be changed in order to mitigate these numbers here, reduce the numbers that you have. Any questions on this point here? No. before I go to the other sheet, the cost and revenue build-up sheet.
Actually, Aldo, I'm reading from the main chat, and we have a question from Manuel Hidalgo, which you partially addressed now, and is our opinion with regards to mitigation measures to avoid the worrying drop in collection and weak cash position. Thanks, Manuel, for the question. And I see also there is another question coming from you, which is more related to other utilities that are using this tool. But there is another question from Raymond on that. So I will address that once Aldo has finalized the model explanation.
Okay.
But maybe
So
you can comment, Aldo, on some measures to potentially avoid the drop in collection and weak cash position. You mentioned already some of them, no?
Well, I mean, the situation, okay, we'll go back into the cost, the revenue and cost buildup situation. I mean, some of these requirements that are they're going to be imposed on the utility, saying that you cannot disconnect. In fact, what is also happening is governments are also, local governments or the national governments are imposing utilities to reconnect customers that were disconnected. So then the revenue and cost buildup will have that impact. So let me go first of all, let me go to this sheet and go through this in somewhat of a detail. This sheet is actually the same sheet that we used for the more enhanced model. And I felt that it was important to have this kind of build up in the cost estimates. Why? Because households pay a different average tariff than commercial establishments. So we've divided this cost and revenue and cost buildup sheet into two basic customers, households and commercial operations. And with that, I've included you can include everything else except households. So you can include government offices, commercial offices, and industrial establishments into an average tariff and an average in monthly in the connections connection in that for that. So here it is. So then let's assume that you had then planned to connect these amounts of say 300 in March, and you were planning to do that, and all of a sudden government imposes you to reconnect additional customers that were disconnected so that everybody's get pipe water. This is where you would actually indicate the additional connections that would be required of the utility. Obviously, if you know, that could be negotiated because of course in the emergency response plan, because you're reconnecting customers that were not paying, and now you have all these new connections that you have to reactivate, and you're only getting like 30% or 50% collection on these plus the other existing connections that you have. So a reduction, perhaps the utility can say, okay, well, we can reconnect some, but others we can provide water tanker truck service, so yeah, whatever. I mean, because this is going to impact severely, and then if you reduce, then you could reduce that to say let's say zero and then say, okay, reduce that amount, you're going to unnecessarily, if you go back to the COVID assessment, you're in a much lower amount, actually not significantly amount, because, but you have reduced the amount of your now increasing collections. I don't know. If the utility is told that you need to just deal with the collections you receive and not penalize anybody, you can make the water available. Obviously, the most important indicator here is the average use of consumption per day, which may, for households, increase during the main period of the collection. So there you have a number of things that are going against the utility through this process: an increasing amount of consumption, a requirement to connect new customers, and basically a lower collections. And all these three variables will affect your revenue and your cash flow ultimately. So now if you had planned tariff increases and now they're all zero, that would be indicated in the, but you may also be required to lower your tariff. So then at that point, let's say the government says, okay, you're required to lower your tariff by 30%. So as you see, you started at 0.75 per cubic meter. And by the way, this is in the currency per cubic meter amount. It's not in millions. And this is showing you what this is Indonesian rupiah. This would be 0.75 Indonesian rupiah per cubic meters. Now you've basically required to lower it to 30% in this month and maybe another. And so you see that your effective tariff goes down from 0.75 to 0.64 to 0.53 and so forth. And then, so that is another thing that we have seen happening during this COVID situation. So we have the same then buildup for commercial operation. Perhaps they had a different tariff. In this case, your tariff could have been much higher on the average for all your commercial customers. Could have been 120, could have been double your households. So that is, again, you have your average tariff here. If you're then required to lower that 0.3, let's say 30%, and then it goes from 120 to 102 to 82 and so forth. And then basically your average consumption will likely go down because as I indicated, many of these establishments may require to close, which is in a way fortunate for the utility because the more production you have now is the less collections you're going to have. So from a financial point of view, so if these establishments close and then they reopen at the end of the year, perhaps then with better collections, you can be able to minimize your cash flow difficulties. So then, any questions? Yeah.
Oh, great. So you're calling for questions. I just wanted to remind you of the time.
Okay.
We are planning to wrap up the webinar in 16 minutes. So by 10:15 our time, 4:15 Vienna. So if you could, wrap up the model in 5 minutes, so we leave some time also for further questions and also some small polls that we would like to make. But since we are at it, Aldo, there was a question by Georgi Christoph from GIZ on, having more information on the calculation of the revenue cost projections, the formula, the criteria, assumptions. I've responded on the chat box that there is actually a user guide that comes with the manual. Midori mentioned in the presentation.
Yeah.
But maybe if you have it handy there and you can just briefly project it just to show it. If you have already finished with what you wanted to show.
I'm sorry, could you ask the question again? Is that, what's the question?
Yeah, no, the question is more information on how the model undertakes the calculation.
Okay.
And how to input the revenue and cost projections. The criteria, assumptions. So how the model works is how I'm reading the question. Because some of the assumptions, and this is a direct response here, will need to be made actually by the utility. We are not making those.
The blue items, well, we can't provide the blue numbers, so we cannot. I can explain how the model calculates, but I can't really do that at this point because it would be. But we are allowing the formulas to be open, so anybody that looks at the model can see how the formulas are done, basically, and how the calculator and here's the calculation will calculate total potential water demand, then daily demand and daily revenue. And then the production requirement is then based on the demand, assuming you're able to fulfill it, against the total non-revenue water. So you have to produce about 35% more revenue, more water than you actually are selling. And then so the total water consumed will be this amount, and then this gives you additional information on the amount of water surplus that you have available from your capacity. And then this calculates your total water revenue, right? Based on this build up here, which then goes into this number here, okay? So that's on the water buildup. Then we have the sewage operation, which is actually very similar. As I indicated, we have a tariff, connections, your average tariff. You'll have the opportunity to, if you need to increase the tariff, if you're allowed to increase the tariff, or if you're forced to reduce the tariff, you have that opportunity. If you're, in this case, we had new sewage connections, you might, that might be an opportunity to reduce the sewage connections and put them in another at another time. So if you had planned to make sewage connections in those first 3 months, you might decide to actually in your plan to put them in the end of the period, which would be better because that's when things get are improving again. Then the last part of this is your operating costs. And as I indicated, okay, now you might have a cost on water extraction. Some utilities pay a water extraction fee to the basin, water basin society, water basin organizations. Others don't. So if you don't need to put in there. And then you have your water, electricity costs, chemical costs. These are the main costs you would have on your water operations. And these costs are not in millions, but in the cost per cubic meter of that currency that you're going to be using. You have to be mindful. So this would be 3 cents of the cost on the currency. These would be, electricity would be 6 cents of the currency that you're using, and so forth. And then you have other items which will be, now this is cost per currency, 1.6 cents. and then you have items that you then put into million, and that's going to be shown here. So here again, then this amount is calculated for, let's say, electricity cost is 174, and as I then show you, it's going to show up in this number here. So that's how the buildup is made on this sheet to then be reflected in the summary sheet. And then with regard to operating salaries, here you might need to actually recruit more more individuals, or you might have more absenteeism. So you may need to recruit more individuals. You may need to provide them with additional bonuses during that particular environment to actually work under these conditions. And you may need to have some overtime expenses that might actually go higher as well as part of the COVID situation. And then we have pension expense and administration and other operating costs. If some of these items have not been included but pertain to you, to the utility, they can include these here. And then we have the same buildup for the wastewater situation, and that's it. So if you don't have wastewater, you don't need to include, this can all be zeros, and then just worry about the water. If you don't have water extraction currency, all you need to do is put this cost per currency is 0, and so forth. So it's quite flexible to allow for utilities to provide to actually estimate the changes in their costs. And let me also say the final thing is that some of these costs are variable, so they are affected by, like, the variable costs particularly are the pumping costs, the chemical costs, and so forth. And these are a function of this consumption pattern here. So you can see that actually drops significantly from the first month to the second month, and then it levels off to 1.7. So these costs are factored in as variable items to account for the fact that you might have a lower consumption or a higher consumption due to the COVID situation. And with that, I'll finish. And then if there's any questions, I can then address some of the inquiries.
Hi, Aldo. Thank you very much. Well, there's a very specific question pertaining to the model, which you might answer straight away, which is it possible to edit the cost lines to match the country-specific cost items?
Cost lines to cost, I'm sorry.
Yes. I mean, we can't hear Fjordi, but maybe you can acknowledge if we are interpreting this correctly. Basically, if there are cost items which are specific to the local context, which are not reflected here, and Aldo already mentioned, there is
there's a number of
go ahead, Aldo.
There's a number of opportunities where you can actually include either additional revenue or other costs, like here. There's this item here is to include other things that have not been particularly referenced. But based on my experience, most utilities will follow this kind of cost structure. But there is obviously the opportunity for including other direct costs here, and other revenues, as I've indicated. On the revenue side, there is a number here on line 60 for other revenue. This is other revenue items. Is that clear?
I think it is, Aldo. As you mentioned, the tricky part is developing a tool which can accommodate, local circumstances in many different countries. But there are these opportunities where you can build in specific costs or revenue sources which are not the classical or typical ones.
Yeah, unfortunately, we had to really consider the possibility that this would need to be used by hundreds of different water utilities in different countries. So we could not tailor it to the extent that that I would normally want to tailor it if I was doing it for just one utility. But the model, I think, is flexible enough to accommodate other costs and other revenues that are not specifically line items in the model.
Thank you, Aldo. There are a number of questions on the whether the tool has been used by other utilities already, and also a question whether the tool is yours, Aldo, and you can address that, but we'll.
The tool is made by me, but I think it's now a tool is a tool of the World Bank, I would say, right?
Indeed. Thank you, Aldo. And then it's going to become a public good very soon, let's say. I realize actually on this with these questions on the piloting, it's not so easy to follow the training, or not as effective maybe, without having the tooling at your disposal. And we discussed this amongst the team as we were preparing the webinar. So as mentioned in the chat box, this is going to be made available very soon. If there are questions or requests for further support on the utilization, on the uploading of information, etc., please reach out. This is, with anything that may come up with using the model. But I know Raymond and the Danube Water Program team are also thinking of how to make available further support to some of the service providers that may need, further support in the utilization of the extended tool for specific purposes, or to go more in depth into the quantification of the impact in your specific utility. So we are thinking of how to do this, and also one possibility that we are discussing is providing trainer of trainers with the associations or the utility associations by Aldo and the team, so that you may as well conduct the training in your own local language to other utilities. And this might be a better way to go about it in the region. Now, because we only have a couple of minutes left, and we see there are no further questions which we haven't addressed, hopefully, in the chat box, we wanted to quickly run a few questions by you that will help us not only finalize the tool, but also continue to advocate for these financial support packages by governments as well, and also to think about what we may need to do in the future to support the implementation of these tools.
Yeah.
So, yeah.
I just wanted to say the number of utilities are already working on this tool, I think, and I am also helping out some like as Patricia mentioned, some trainers of trainers. I am actually having some sessions specifically with others that might then help the utilities go through these things. So we are very much open to work with you, and if you need to send me your projection to review, I'm happy to do that as well. So that's something that is definitely there for everyone.
Thanks very much, Aldo. And Midori provided some feedback already on the cases of Latin America. And also there was some questions and answers in the chat regarding feedback from those. So thanks. So just very quickly to be able to close, hopefully still on time or just with 1 minute delay, if you could take a look at the question posted and the 4 multiple choice answers, you could choose all of them if all apply to your utility. Revenues are being negatively impacted due to reduced commercial consumption. Revenues are negatively impacted due to public mandates to reduce tariffs or enhance reconnections. Or other means of public regulations to protect the customers. C, collections are being negatively impacted due to reduced ability from customers to pay the bills, or the costs are increasing due to expanded services or higher costs. And again, you know, all of them may be applicable.
Yeah, it's a combination of things, could be. But most of the quantified cash flow problems result from low collections. That's where we're seeing that, and so the lower collect, that's, you know, by far the biggest impact that we're seeing so far.
Indeed. Yes, Aldo, thank you for that. So we have the poll has ended and we have the results. Let me see if I can interpret. So actually, we got very few responses. Maybe people are already on the way out. But based on these responses, the impact, we got only 7% of people responding one or the other. So we might need to actually rethink the questions, or the impact in the region is not being as we imagine it to be, or based on the feedback that we are getting from everywhere else. So maybe just very quickly, let's go to the final question, Katia. And we can figure out later how to interpret this result. So this is very quickly a yes or no question, just to help us plan for the future. Would you intend to use the tool presented in this webinar to assess financial impact of the crisis in your utility, yes or no? You can interpret this question as would it be useful for you? And again, it's going to be of public use, so you might as well use it and not tell us, but we'd like to know if you find it useful. Second question, if you are representing a government institution or regulatory agency, are you currently considering working on financial support packages for water service providers to handle the COVID-19 situation? Again, yes or no. And question 3, do you foresee that the forthcoming paper on considerations to set up liquidity facilities, which was presented by Joel earlier, would be useful to your country in this endeavor? Thank you for your responses in advance, for those that are still connected. I'm really sorry to go over time. Okay, so thank you very much for these responses. I wonder whether we did not also provide enough notice that the questions were going to be coming, or some issues with actually going forward to respond the polling, because we did not get many responses, but that's okay. Thank you very much, Midori, Aldo, Joel, Katia and Raymond, again, for organizing. Thank you very much to all of you for participating, and we hope to be in touch for the future in the use of these tools. And just actually an announcement for the next webinar by the Danube Water Program in this COVID-19 situation. I am sure the team will follow up with an email, but the next event is planned for June 20, June 24th, and it will be on water technology in service of public health, and how to detect the presence of COVID-19 in sanitary wastewater. So mark your calendars for that, and great to be part of this effort. Thank you.